can hear you.
Okay. I was saying that of course that the market is still chaotic. Like to me personally, because I took some setup that actually stopped me out. Just like the update you made, I think on Wednesday, that you were like, these were the pairs that were all on red like few minutes ago, and boom, a whole lot of them are now green, which I think pound. Hello, can you hear me?
Yeah, I can hear you, but it seems like
Blessing,
your
can you hear
network
me
was
now?
kind of shaking a bit. I can, but it seems like
Hello.
your network was shaking, so I'm not sure if it was me or if it was from your end. But I did hear you. I think you were
Same thing
referring
here. Like
to,
Carlos' voice is breaking.
yeah, Color's voice. Yeah, it is breaking. But I think you're referring to the GPUs, right? And that is true. I think we'll
Yeah,
even
yeah,
walk onto the chat in a few minutes. In a few minutes, we'll walk onto the
yeah.
chat
Of
and see
course, I
what's
was
going on.
referring.
Yeah,
Of
I
course, I was
remember.
referring to
But
the
yes,
GPY.
true. The market has been very chaotic. I mean, Trump, guys, crazy. Now, I think if you guys, I've not really posted so much of the macro and things happening with the tariffs, right? But in recent times, I think let's see. Let me quickly share my screen now. So in the last few days, I think that was yesterday, we saw Trump and China go at each other. Now, hold on. Let me share my screen. Yeah, so we saw Trump and China go at each other, right? So I think China kind of retaliated to the tariffs that Trump gave on China, right? So they were retaliating by also raising tariffs on U.S. goods and services. So it was not like a trade war between both countries, and so Trump had a plan, and his plan was to make China look like the bad guys, right? So by raising tariff plans on China, China would also retaliate by raising as well. Now this was going on Wednesday. I think that was yesterday, and when China raised to some extent, what Trump did was he had to announce that he was going to take a 90-day pause on tariff plans worldwide, right? So he did that, and the only country he exempted was China, right? And that's because of China was retaliating. So it then made China look like the bad guys for retaliating on tariffs and stuff like that. So now on Wednesday, while Trump and China were going at each other, we can see that these currencies were moving crazy, right? They were just it was haywire, right? It was just too crazy. And same Wednesday, you can see this huge bullish candle, right? The reason is because of the pause, right? So that pause that Trump gave, the 90-day pause, was more like a relief for the market. You get. Now, of course, when things are uncertain, we have safe havens, Japanese yen, the Swiss franc, things like that. These currencies tend to act as safe havens. But whenever uncertainty is trying to unwind, people kind of like retract their orders and stuff like that. That's what was happening on the GPY. So that's why we saw those currencies, even though they were in huge reds on Wednesday, which was yesterday. When that news came in, okay, they all turned blue because it was like the Japanese yen lost value at the time because it was no longer supposed to act as a safe haven, if that makes sense. So that's pretty much what happened. So these currencies were just pushing really much. I think 80 JPY, a lot of JPYs in fact were in serious blues yesterday, and not just with currencies, even with like equities, right? So some of the equities were pushing really high. They had a huge pullback. So let's see, right? So this was yesterday, right? Look at this huge candle on France 40. Most of these indices we're also recovering slightly from that news. The S&P as well also had, yes, look at this yesterday, also had some sort of recovery. It was cool. It was cool. I mean, that news coming in yesterday was like a relief rally for the market, and people jumped on it, and that's what happened yesterday. But now today again, I think it's still chaos, right? It's just very chaotic. Now I think the tariffs are setting, so sooner or later the market will kind of move away from the tariffs. Today we had CPI from US, inflation data from US. It came in really low. Like the data missed badly. I think inflation has come down to 2.4% from 2.8%. That's big miss. But now it's now about what the Fed would do with interest rates. Would they cut interest rates with the current things going on or not? So I think um, attention might move away from tariffs, okay, for this time period and move on to something else, right? So we'll see. We'll see what happens. But we don't deny the fact that the last few days and weeks have been very chaotic. So yeah, now let's, go on to the chat and see what has changed. Not much, but first of all, I'll just update that we're live so that more people can join us. So yeah, okay. So on the charts, not much has changed. All right, so yeah, pretty interesting thing. So let's look at AJPY. Now we have dropped all the way to this key level here around 89. It's an important key level. The market has pulled back on the money time. This is a huge pullback. Now these levels were like levels that price traded at in 2023. So the market have pulled back to these levels. On the weekly time frame, we're also experiencing this pullback, and I think these levels are very important because if these levels break, we might be looking at more downsides. We just might, but it's a question of seeing how price reacts to these levels. But if they don't break, so we came here, we broke below, we're breaking back above. So let's see if this is going to happen like a retest to continue to the upside. All right. Remember, okay, what is going on in the market? It's sentiment, right? So that also the explanation I was giving us to the decision from Trump to give a pause on tariff. Now you see how the market reacted to that information. That was not a fundamental news, it was not a fundamental data, it was nothing of that sort. It was just Trump's decision and how the market took it. And then remember that before that time, I think if you guys follow Trump and his tweets, one of the tweets he dropped was that this is to buy. I don't know if any of you saw it, but he did say that. And that tells you that the market right now is moving based on sentiment. Okay, I've said that before, but I think you can see the evidence time and again. It is really moving based on sentiment. Now, but if we have to look at countries in themselves, Australia and Japan, Japan is still suffering. I think yesterday or 2 days ago, one of the important data, which was consumer confidence, missed in Japan. That's not good for Japan as well. What am I trying to say? The economy is still not the best, but the currency is gaining strength, right? Because of sentiment. Right now, it is one of the most important currencies in the world because it acts as a safe haven. You get my point is, if sentiment shifts away from what is going on now, and if the whole thing with the tariffs settling and the market start to pay attention to the fundamentals and the data, then we might still see ADJ switch back into an uptrend, right? But for now, that's not the case. So it's a thing of being patient and allowing, like I said, these things to settle in, and that will kind of determine what might happen in the next few days and weeks. So the key level is still important. I like to see how price already reacting to it, which is good. But I like to see what patterns we get at the key level if we break, if we don't break, if we maintain our support. If this happens like a break and retest, that's what I'm to see. But now, if these currency pairs would switch back into an uptrend, then this would be a very beautiful discount to buy from. But I'm not trying to do anything just yet. I just want the market to ease in and settle in before any decisions. Cat JPY, so I'll take this guy out. And to be honest, not much has changed, right? I still want to break out the pullback, and that's about it. So same thing. CHFY is pushing, right? Interesting. And this goes to show what I said about patience and holding your trades. Because it pushed in profit, came back, pushed again, came back, and now it's pushing again. Why is CHFY in green aside the other currency pairs? It is because the Swiss franc is also a safe haven. But at this time, it seems to be more important than the Japanese yen. I don't know, right? Because you can see that gaining so much more strength against the Japanese yen. So the Swiss franc is also a safe haven. So that's why it is not down against the yen, if that makes sense. So, and that's why it's even gaining more than the yen, because it's also a safe haven. So the yen is quite lesser than the Swiss franc at the moment, and that's why. So I'm still long on CHFJPY. So of course, I'd allow this trade to continue playing out. EJ, not much has changed. Same breakout, right? I'm waiting for the same breakout. It hasn't happened yet. Pound GPY. Okay, interesting. So I got involved. I bought Pound GPY a second time today, and who knows why? I'd like to ask the question: who might have an idea? Sorry, I got back into Pound GPY.
Yeah, hello.
Yeah, Abdul, go ahead.
Yeah, no, actually, I wanted to ask them because when I saw your update on the your update on Pound GPY that you took your entry today, because I wanted to ask about why did you exactly take your entry? Because I don't see any reason for you to take your entry something like this also. So
All right, interesting.
So,
So why did I?
yeah,
George, okay.
that's it. Yeah, it took me out also. It took me also. So I saw your post like you are buying again. So I look at it and I realized the prices have come back to the 188.88. That's the key level. And so like price have also have tested it for a while. So that's the reason why we are still buying again. Not that.
Interesting.
Yeah.
Yeah, that is true. That is true. So to help answer Abdul better, now remember, right? The idea is to stay long on Pound J, as long as price maintains the key level at 188, right? And so far, the market has been doing that, which is cool, right? In fact, I bought here in February, which was very interesting. So the market came down here to the key level and then stopped me out. Interestingly, it took me out. And what happened at the close of yesterday? It closed back above the key level, right? So remember, the only reason why I would leave a trade idea is if price break and bounce the key level, right? And so far it hasn't. I was just taking out. What that meant is, if my stop loss from where I entered yesterday was a little lower, I would still be in the trade, right? And that's it. So if we come back to the daily, weekly time frame, and the monthly, we have not broken the key level yet, and that's why I stay long on Pound GPY. I was just weaked out, quite frankly. So that's it. Now it's quite tricky.
But on your hello.
Yeah, I can hear you.
Yeah, but on your monthly key level, your monthly time frame is showing a bearish candle. So actually, and why? Because after you took your entry to this, so I just decided to check on Pound GPY, so I could check everything, and I saw that okay, on the monthly key level, also on the monthly time frame, it's showing bearish, and was like, okay, that's for a moment I even felt that okay, is maybe whether I felt like, are you changing your system also? Because you are going bullish, and on the monthly key level is showing a bearish candle. So I don't know if you get my points also. So
yeah, I do, but let me explain, right? Remember that the idea did not start now. Okay, the reason for buying Pound GPY did not start now. It started like months ago. Does that make sense? And I only leave pound JPY if price breaks, right? Remember, price needs to break and close the level and take me out, right? For me to say, okay, fine, we have broken. But Abdul, would you say at this point that we have broken the key level?
No,
Would
yeah,
you
we haven't
say that
broken the
we
key
have
level.
broken?
No,
Good.
the
Now,
price itself is breaking the key level.
exactly. Thank you. Now, is it possible for this candle being bearish to retrace above the key level before the end of the month? Is it possible? Even though the candle is
Like,
bearish right now, is it possible for this candle, this red bearish candle, to retrace a little bit before the month ends? Is it possible?
yeah, it's possible. Yeah, it's possible. It's possible for the candles to
Good.
retrace.
Exactly. What that tells you is if the candle would retrace, then we didn't break, right? So what we're waiting for here is for the market to decide, right? That you see why I've always said we don't chase, right? But we allow the market to do what it wants to do. So again, coming back to my entry, all right, I was taken out on the daily time frame. All right, I took a bar at the key level, and price wicked me out, and then turned bullish and closed right above the key level once again. So that shows that we have not violated the key level. So I don't have any reasons to not be in the trade, because what would my reason be for not buying pound GPR right now? What's the reason? The only reason why I should not be buying is if we have broken the key level, and we haven't broken. We just had a fake out, right? So that's why I got back into the idea on pound GPR, and I'm long. I don't know if that kind of answers the question. So on the money, we have not even broken the key level. But if we do break, then of course I'll take another loss, right? Which would be, and then I'll just 1% loss. But the point is, that's when I would now, okay, fine, I would no longer be a part of pound GPR. I think that if that helps you understand
Yeah,
the
yeah,
idea.
it has. Yeah, yes. Thank you.
All right, cool. So yeah, same idea. If we push, right? If we push, then of course the key level is maintaining price action. If we don't, if we break, then of course that's the end of the idea for now. That's about it. So that's why I'm still long on pound JPY. NZD as well. So we came down to the key level, come on the weekly, so we bounced, right? Kind of bounced there, maintaining price action. So it's still interesting, right? I want to see how the market reacts to this. If we would form some sort of new break and retest, as we try to break here, we feel we're breaking back in. Do we have any break and retest? That's what I'm trying to see. So time will tell if this would happen. But yeah, I don't have anything on NZGPO at the moment. Now, of course, it can break, right? But only when it breaks, we'd have to speak about us getting into bearish territory. But for now, not really. USJPY. Now, quite frankly, the dollar is taking a hit. The dollar is taking a very big hit, and it is interesting to see. But yeah, either way. So UJ, we broke below this weekly level of support, and we're trading around these levels for now. It's possible. It is possible for the market to come down here and test. If Japanese yen continues to gain more strength, it is possible for this to happen. But yeah, we'll see if it does happen. Now, if it does happen, of course, I will still be interested in that. We break below, we break back above, and then let's get full action. But yeah, that's if we come down to soft levels. So yeah, that's about it for GJ. AD card. So I'm out of this guy already. Bureau card, but still just at the key level, right? Just consolidating at the key level. Now I'm not trying to pay so much attention to TA at least until the end of the month. The reason being because of so much chaos going on, right? So the market has to settle in, and I want to see how price reacts to how they close at these levels towards the end of the month. That would help me determine where we could be headed in the next few months. So that's why I'm not trying to rush TA at the moment, if that makes sense. So your card is still at the key level. Pound card. Yeah, I was supposed to drop an update on pound card today. I think I forgot to do that, but I would definitely do that this night or tomorrow. So we pull back and we're testing this weekly level of support. I think Abdul mentioned this on the Discord chat on pound card. So we're still kind of maintaining the level of support, which is quite interesting. I'm still long, although I'm giving back most of my profits as we speak. But yeah, let's see how the market reacts to this. If this is the higher low, then of course,
yeah, I'm planning.
yes, I remember.
To go long on this pound card. So I just want to see how the price will react to this level first before taking my long.
Yeah, so let's see how we react. So we kind of bounced initially, but we came down. Yesterday was chaotic. Now again, this is what I've said about times like this, when risk management just rules every other thing, because in times like this, it's just chaotic. Now this reminds me of Trump, although this is a different situation, but it reminds me of Trump back in the days when he used to be president. Like I said before, all he needed to do was tweet, just like he's doing now, right? He could just tweet anything at all, and your TA is gone, right? Everything you had analyzed can just go to shit just because it's tweet.
Yeah,
it was crazy.
Hello.
I can hear you. Go ahead.
Yeah, actually, on Monday when I posted about this pound card, on this, I think on the second bearish candle, which is the retest. So I actually took my long then, but I was stopped out with this long bearish week. So I'm still thinking maybe the trade I still on, maybe probably next week I might probably take on the trade again.
Oh, so you were long already on?
Yes, I was long. I think that was Tuesday or Monday, I think so. But I was stopped out by this long bearish this long week. So I was stopped out then.
Yeah, that was nasty. Ouch. Okay. So yeah, yesterday was chaotic, and then the pound also has weakened drastically in the last few days. I think I haven't really checked the fundamentals to see if anything contributed to that, but yeah, the pound has weakened drastically. So I think it's now to see how price reacts to this, right? And then you see, okay, I think we save this for the book. Yeah, I can hear you.
Yeah, please. I wanted to ask about pound card. The 1.86 area whereby the price reverse. So could you say that place is also another possible level for price to reverse? If you go to maybe weekly time frame for you see the 1.86 area.
This level here.
The level, yes, that area.
Okay, I would personally consider this a pullback. Not necessarily that this is a key level, right? I did not see any key level to the left to work with at the time, so I would just consider this a pullback as opposed to an actual 3 months or 6 month key level. So is this a key level on the weekly? It might be. Let's see. Let's see. So okay, yeah, you can call this. Looking at past price action, you might want to call this.
I was watching that.
Okay. So you might want to call this a level. But now here's the thing, right? Let's see. Let's go over to the 3 month time frame. Just a step higher. Now you see the difference, right? And this is what I do personally, and that's why again I say that some of these things are not wrong in themselves. It's just how we operate and how our systems are created. So you can see the levels I am looking at, right? These are levels from like decades ago, right? This is 1983, this is 1993, this is 1989, this is 2009, right? So this is a much stronger level than this is. And I use these levels are levels I pick up. Like these are universal levels. I don't just use them because of short-term price action, if that makes sense. You get, and that's why I buy and sell at these levels and I close at these levels. You get, because in the long term, the market would most likely just trade towards this level. That's just how you would do in the long term. It doesn't change the fact that you might react to some other levels in the short term, because now you can see that that level we draw out on the monthly time frame or the weekly time frame is not here on the 3-month time frame. It's not really evident, right? This is what is evident. So on the 3-month, on the 6-month, on the 12-month time, you see this. But that level we draw here is not here. But if you come down to the monthly, then you can start looking at it, right? You can start you get. So this is like, that's why this is why I pick my entries at these levels, because of how important they are. You get, and that's why even though I feel like the market has pulled back on this level, in the long term, it would still want to test 1.90. You get, it will still want to test 1.90. So that's pretty much why I'm still like holding my longs. Can you guys hear me? Is it just me?
Yeah, I can hear you. The line was breaking though.
Oh, okay, sorry. So, but does that answer the question there? Are you clear on that?
Yes. I understand, Kasi. Thank you. But now I was thinking the reason for the reverse. I was really worried. We are in profit now. Look at what is happening now. So I was trying to find a meaning to it, but I'm okay.
Sorry,
Okay.
I have a question.
All right, yeah, Yusuf, go ahead.
Okay, yeah, thank you. That was a great explanation. So does that mean that you stop taking or deciding on your key levels at the 3 months on the 3-month time frame? Or like what is the lowest level you get on to decide that okay, this is where I'm stopping at? I'm not going lower than this.
The 3-month time frame, yes, that's the level. That's the time frame, the least time you use, yes.
All right, because sometimes I start from the 12 months and I don't see things very clearly. I go to the 6 months, I still don't see things clearly. Sometimes it's still not clear on the 3 months, but you can see it more clearly on the monthly time frame. So that's why I'm trying to ask about this. Okay.
So yeah, I understand where you're coming from. Now, the reason, right? You see, the reason why I use the 3 months, why I don't use the monthly, like if the level is there on the 3 months, it will also be there on the monthly. You get, but the reason why I don't pick out the level on the monthly is because when you add the monthly levels, they break the price action, right? You get, they break the price action, because if I'm to add this level now, I would have closed here and then wait for a new. But then the way I designed the entry pattern was supposed to take the entries at just the major key levels, if that makes sense. So I make sure that the entries come only at the top levels. So by putting the monthly key levels, it then breaks down the moves, right? It then breaks down the moves. And what I noticed that I did not really get opportunities to get involved the second time if the market was going to continue in that same direction, right? So it's the same thing as not using weekly levels, right? Because even if you scale down to the weekly time frame, you find a level. Like I said, there's always a level in the market, right? There's always an area where price has reacted to as resistance or support. You always find it on the weekly, on the daily, and for every time frame you find it. The question is, which of these levels do you choose to use, right? Because if you come down to if you choose to keep the level here, right, as the monthly, if you come down to the weekly, then you might want to use this level, right? Because this is the level on the weekly time frame. It is, you get. But now I don't have these two levels on my for good reason. So because of the way my design, I don't place so much emphasis on levels that are not universal, right? Levels that are not visible on the 3 months, 6 months, and 1 year time frame. So that's how I do it.
All right, yeah, cool. That makes sense. Thank you.
All right. So that's why we have some differences in some of the trades we're taking. Like for example, this bar here, right? This bar here, I personally would not take it, right? It's not wrong, but I won't take it. Now, I think in the past we had some scenarios with pound AUD and pound NZD. This happened in the past.
Akasi, sorry for interrupting. Like, I want to find out: is it that you are breaking, or it seems that you are
Damien, go
breaking,
ahead.
or this maintain? I want to find out if you are breaking or it is maintaining that is not. I mean, that is not strong this evening, because it seems you keep on breaking. I can hardly follow what you are saying.
Okay. Can you hear me now?
Yeah, we can hear you. I don't know. The network is just breaking tonight.
Yeah, it is. I had to switch internet connections. I think that was from me. But Damien, can you hear me now?
Okay, yeah. Now I can hear you. Thank you.
Okay, so all right, I'll switch internet connections. I think that was for me. But okay, now going back to what I was explaining, right? That is why some of these entries I didn't take some of them, right? And some of these entries, these pullbacks, I wasn't involved in some of them. What else? I think pound NZD had same thing. Exactly, some of these pullback entries, I didn't take them, right? But these were opportunities to get involved. Why didn't I take them? Because of the levels I choose to buy from. So it's not like they were wrong, but I just did not trade from such levels. So in the same way, right? In the same way, this could be another opportunity to buy a pound card, but it's not an opportunity that I would take just because of how my system is built or designed. You get. So yeah, I just hope that kind of like clears the explanation. All right. So yeah. Now remember, I'm still trying to work around some of these daily and weekly levels. I've just noticed that they stop out more in times when they are not going to play out. They'll stop out more, and in times when the trend is just so smooth, they make more money. But the system I've built so far, and I'm trying to also increase the skill set on the system, is to make sure that the system has the least amount of drawdown possible. That's the goal of the system, right? It's a system built for huge capital. So, like I said before, it's not after the best returns. It's not necessarily after so much returns. It is just after making sure that the drawdown is as small as possible. So, in a bid to do that, I have to forego some entry patterns, and only look for like universal. That's why I said the system is built like a universal system. If that makes sense, any asset class, it would work, and it would work just well. You get. So that's why it's like this. That's why some things don't get into the system. It's not that they are wrong. It's just for the sake of how it is built, it has to move like that. So I think that's about. And I think you guys have also seen the progress with the system, right? Because I think I showed you guys the result from like October up until now, the changes and how they are looking. So again, I would miss entries. I would miss some opportunities, but I mean, it's for the best, at least for the system. So. Yeah. So moving on, NZD card is in profit. Pulled back this week, of course. These are some levels to watch out for. Hold up. So let me take this guy out. Sorry, this is the monthly. Let's see. And also, sometimes when you scale down to some of these time frames, you become confused because there's so many levels to just be wary of, right? And that's why I don't like to dabble so much on the lower time frames when I'm trying to pick out levels, because sometimes you could be so confused. Let me see this again. All right, so this is interesting. Now, 3 weeks ago, the level was down here. Right, I think it was down here. I think I just took these guys into account, and now the level seems to be up here, right? So it can vary sometimes because of how you're looking at it, and I don't want this because in my system, the level is the reason for the entry. It is the reason for the entry and the exit in most cases. So I don't want this swing of emotions, or I would not say swing of emotions. I would say this difficulty deciding which level to keep it at. First of all, it's an area. We know that these levels are not, in most cases, they're not exact price levels. They're like areas, you get. But still, you want to keep them as concise as possible so that you can have a good entry and also have a good risk to reward. Now, what I'm trying to say is, when you move your levels too much, it can alter your idea entirely, right? You can alter your entry pattern entirely. So when you come down to lower time frames, you have more of these things going on, right? Should I keep the level here? Is it down here? Is it down here? Right? You just have too many questions to answer when you come down to the lower time frames. So it's not like the monthly time frame is a lower time frame, but I rather look at levels where on all time frames, or at least on the 3-month time frame, it's clear and it goes back like way back in time. You get. That's another thing that also contributes to the levels I pick. These are levels that go back decades ago, right? You can see that this reaction came as far back as 1983. I mean, most of us were not born at the time. So you see, these are some of the things that help with the solidarity of the levels I use. And that's why on the monthly, I don't really just want to pick out levels. If I'm picking out a level on the monthly, I like to make sure it's also there on the 3-month time frame, at least on the 3-month time frame. So I hope that that explains that. And that's why I don't have any of these levels here, right? Because if you look at this chart on the monthly time frame, there are so many places to try and pick a level. Sorry, I think I took this guy out. Okay, cool. So, let's see. I might choose to do it here. I might choose to do it here. I might choose to do it here. You see, at every point, the level might make sense, right? You see, and that's the confusion. And that's why it's important. Because at every point, the level might make sense to you. So if you do it here, it might make sense, right? You say, okay, we reacted here multiple times in the past. And if I was to add this monthly level here, I would not want to sell enter the card because I would say that price has already touched the key level. But now this is not the key level I'm speaking of. When I use the term key level, I mean the key levels on the 3-month and higher, right? Because if I was to pick this and keep this here, then I would say, okay, we already tested the key level, so I would not want to sell. But then this would be wrong in this context, right? And also, I can also decide to adjust this guy down here, and it will still make sense. So if I did this here, it would have been valid to sell. But if I did this here, then it would not be valid to sell. It would be invalid. So at the time, you're like, it'll make you confused. Like, okay, which of the levels do I use? And this is the dilemma when using key levels. So to avoid such predicaments, you just have to go on higher time frames, pick the levels. These are universal levels. Okay, you see them clearly, and that's why I do this. So I hope this makes sense. And then, like I said, if I was to add these monthly levels, I would have closed NZD card a long time ago because the price is already testing one of these levels. At some, it would test the level, right? It would always test something. It would always test something. I would want to say, okay, we're testing the support right now, so I should close. But that's not how I use the system. I need to make sure it is coming to another key level. So if you come to the 3-month time frame, you see the levels, right? You see how far back this goes and why my take profit is down here. So, I mean, it takes time and experience, but I think you guys get a better understanding as to why these levels are important.
Hello.
Yeah, go ahead, Abdul.
Yeah, okay. So since we are talking about key level, actually, this past few days, because I want to ask that what are the factors like personally that you consider before drawing your key levels, like maybe in terms of time frame and how we are going to draw the key level that it will not suit your looking like it's not suit your interest. Like, you've already told me about this thing before, like, because let's concerning NJ, because after I listened to your review, like I later understood that okay, the key level that I drew on NJ, I drew the key level like like I drew the key level to suit my interest, like to suit how the
Yeah.
thing is supposed to work. So I want to ask that what are the factors that you consider when you want to draw when you want to draw a key level? So because this past few days, because of the volatility, right? This past few days, because of the volatility, right from I think right from the CPI to the NFP also, because it's really messed up with my trade ideas. Like because I don't, so I felt like maybe my trade idea were probably wrong also. So I want to know like what are the things that you consider before drawing a key level?
So now, since we're speaking of key levels, what are the things I consider? Now, first of all, you notice that I don't change them, right? So that's to tell you how important they are. I don't change them when I feel some type of way. Right? I don't. They're there. And one thing that helps you draw key levels is to be very objective. Okay. Remember, these are levels that were traded in the market. Okay. You were not even part of these activities in the past. So when you're drawing the levels, you want to draw it from the market's perspective, not from your perspective. That's why I think that when you want to draw key levels on the chart, you want to just pick a day and draw all the key levels on the assets you're trading. This way, you're going to do it from like a middle ground, right? I don't think you want to go and draw a key level on a particular pair when you're about to trade it, because in some way you just feel some type of way as to drawing it in the way that suits you, and that's what we need to avoid, right? And this is something I faced. I had this issue, right, where I would draw a key level, and because I wanted the market to fit my idea, I would then adjust it. So let me give you an example. So let's say I'm looking at entity card, right? So let's say I had the level down. Let's say I had the level down here, right? Say I had the level down here. Now, ordinarily, this would go as prices testing the level of support, right? So far, so good. But then, if I was looking at selling, right, and that's the thing with staying on the chart too much, and that's the thing with not having a proper system. These are the issues. So if I'm staying on charts too much, I might begin to fondle, and I'll be like, this looks interesting. Okay. Okay, this is like a retest, right? It might be a retest. And then I'll be like, okay, hold up. Did the market not test this level in the past? It did. It actually did. It did test the level. So I'll do that. I'll come back to the. I'll be like, okay, fine. This is perfect, right? Okay, so this is where the market was testing. I was wrong. And I come out to the daily time frame. I'm like, yeah, this is the break and retest. Cool. I'll sell this guy. So I'm like, okay, fine. I'll wait for the price to test this, and if I have a bearish candle, I look to sell. Now, do you see that I have automatically changed my idea on entity card? From looking at this as a support level, I have switched up, and now I'm looking to sell entity card. Now, if entity card stops out, I then be like, maybe it was the support level, right? Nah. But if the market plays out, then I'll be like, okay, yeah, I was correct with this guy. Yeah, this is the level. Now, do you see the problem? Do you see the problem with making your level subtle, right? And that's why I said if you want to draw a level or if you want to draw key levels on your chart, of course, we'll have this discussion again, a set day for key levels, but it has to be levels that you draw on the highest time frames possible. It just saves you the stress. And you don't want to adjust the key. You don't want to adjust them unless you see proper reasons, not because of a trade idea you saw and you just want the market to fit it. Because that's what I did right here. And this would happen to any of us. Okay, I'm saying this from experience. It could happen to any of us. Because this is a break and retest. It is. And if you want to sell this guy, the market, in fact, I promise you, You find a bearish candle today, story tomorrow, Monday, Tuesday. There will be a bearish candle here somewhere, and you must sell this guy to break the resistance. On the other hand, this will also be a support. So it can leave you with a dilemma sometimes, right? And that's why I said before that anything you're looking for on the chart, anything at all you're looking for on the chart, you find it. If you're looking for a reason to buy, you find it. If you're looking for a reason to sell, you find it. So if you're not careful as to how your technical analysis is built, how your system is built, you could be in a roller coaster and not even know you're in a roller coaster. Like you could just be in that boom and bust cycle, and you don't even know. You think you're doing something correct, or the market is against you. You don't know that you have your own fault. And like I said before, it is only a journal that can tell you these things, and that's why a journal is so important. So to answer the question, to come back to the question, what do I look for when I'm placing key levels? So I start on the highest time frame possible, and I work my way down to the 3-month time frame. And I make sure that the key levels I'm using are levels that go from way back. And that is why using this chart, ICE, the Intercontinental Exchange chart, is important, because from what I have seen personally, they provide the oldest data possible. Now, this data, this guy goes as far back as 1979. Not all brokers offer this. I think FXCM is the only guy that comes close. FXCM comes close, but not all brokers. Sorry, come again. I think Carlos was saying something. All right. Yeah, but it's going back to my point. Not all brokers offer the prices as far back as that time. Now, for example, look at Owanda, right? So Owanda stops at 2004. Now, if you were to draw your key levels, you'd start with this data of 2005, right? That's the oldest you can get. Now, it can affect the way you draw the levels. It can affect the way you draw the levels. Because now, if I was to start drawing my levels, I would start looking at this guy, right? Because from this price action, from the oldest price action, this is the reaction I'm seeing down here. And then it would seem like it, right? But let's go back to ICE and let's see what we have. Yeah, I've done crazy things on this chart. Hold on. Exactly. Now you see the difference. With Owanda, you were looking at let's see. Owanda, you were looking at here, right here. So I think it was somewhere around here. 2004. Yeah. This is a price action that Owanda left us with. Just about this point. So with Owanda, you'd have been joining the key level slightly lower. But now look at what influenced the reason why the level has to come higher. Look at this retest in 1983. Look at this reaction in 1987. You won't neglect this. And this will play a vital part in your trying to draw key levels. And now, what coincidence? How much of a coincidence is it that between 1984, price came back, I don't know, decades later, and tested that same level as resistance and dropped? How much of a coincidence can that be? It's never a coincidence. So you see how important these levels are, right? So this is just to show you the importance of the levels and why they play a vital role in my system, right? But then it shows you the importance of the charts you can use to draw these levels, because with some brokers, like I said before, these are CFD brokers, contract for difference brokers, and they don't have access to liquidity. Like what I mean is they don't have access to the original data that comes into the exchange. So they get liquidity from liquidity providers. They have access from liquidity providers, which are banks and institutions, hedge funds sometimes. Now, where do hedge funds, banks, and some of these institutions get access? They get it directly from the exchange. What it means is hedge funds and some of these banks, they get their data direct. So the actual orders that come into that are taken collated in these exchanges, they get access to the data, and then that's when they give it to like brokers, for example, and now brokers then offer them to us as retail traders. So as a retail trader, before you get an actual price feed, it could be altered. I don't know if that makes sense. It can be altered because some brokers have different price feed, and that's what, like I said before, when you open your chart, you can open one broker and then the price feed will slightly differ from the next broker. That's because the way they receive their price feeds could differ. They can alter it, or sometimes it's not just exactly accurate. Now, for some traders, it may not be a problem, but because of how I place my trades, it is a serious problem, or it is a serious matter, if that makes sense. So that's why I don't just use any brokers, or I don't just look at my price feeds from just any brokers. I have to make sure it comes from an exchange of some sort, because then you're looking at like the closest to the real thing. I think some persons pay. I think you can pay for some I think direct access with some of the equities and indices, but for currencies, this is the most I have. And that's why I also refer back to futures sometimes, because futures is like also what you can get as the actual thing. So, but yeah, I hope this kind of makes sense. So the time frame is important. How far back the levels go is also important. I think these are two things I look for, and then I try to remain as objective as possible. And that's why I make sure to start on the higher time frames. And I make sure that if I'm plotting a key level, I know that I won't have to adjust that level for the next 5 years, 4 or 5 years, except something like drastic happens, or except I see a definite reason to adjust it. So I'm not drawing a key level because I want to use it next week. No, it's there on the chart. It's a key level that price is working with on the chart. So I don't know. Does that
does make sense, but you were like I'd add to love to add to what you said. You're like the chart kind of add to the key levels that one pick. I would actually get to say it's not kind of like it's really do add to it, because I'm actually a victim of this problem, because when I actually started last year, I was so much into Oanda. It's this year that I got to get to change a whole lot of things, which I started using ICE. That was the very first time you made mention of ICE. So I don't have to take out like I think it took me like 3 days, just as you're saying now, to mark out these key levels. Like I took these pairs one after the other, and coming back to compare with my old chart where I was having my key levels on Oanda, I was just seeing something crazy.
Right?
Back then,
I would just right?
I would just be getting stock out from some trading ideas I'm taking from this key level. But I think talking about ICE, being stock out is maybe I just decide to keep my stocks very tight. But if I get to make my stocks realistic, I just see that these levels, wow, that they're very great. Yeah, they really save. They really save. So I actually appreciate the idea of the ICE. Yes, because it actually been a very big beneficial of the ICE update. Yes, I've actually used it, and it's really working for me, and it's really helping me. I appreciate.
True, interesting. That's okay. And then this is not to say that you must, right? It is not to say that every single trader on the planet has to use ICE, right? Not that. It just depends on how you trade, because some persons don't necessarily use key levels on their chart. They trade differently. So it matters when you're trying to be precise with your key levels. If you use key levels, then of course you want to maybe look into that. But not everybody has to do it. I'm not saying everybody with different styles must use ICE, not really, because some of the systems I'm working on don't even necessarily need this, right? Not really. So just to put it out there, that it is not the fact that you're using a different price rate that is making you take losses. No, okay. But if you are using key levels, then key levels like this, if you're drawing your levels like you're trying to go back into the past and get those levels, then you might want to consider using this for the sake that it would give you the oldest price feed, right? So I think that's a better way to go about it.
Then then I guess maybe that's probably one of the problems I'm facing now, because most of the losses that I got maybe right from March and engine of March on NJ, CJ, UJ, because I was stopped out by just a short week. I was stopped out, and right now I can tell you that the market, like the trading idea that I said during that time, is going my way. Like it's actually going my way there right now. But I've already been stopped out by just short weeks then. Because and concerning this key level too, because because of the volatility that's happened this past few days, it's really messed up with my trade ideas. And you know for a moment I even thought of maybe of taking out the key level and maybe looking out for a new level. But I thought that like maybe I'm going against my principles, so I shouldn't be doing that. I should maybe I should just focus on my trading idea. So maybe like it might probably work out maybe in the near future also. So that's why I did not later take out the key level anymore.
Yeah, so I think um you just need to make sure like that the levels are drawn properly. And now you draw levels slightly differently from me, right? Because how do I explain this now? Again, the levels still differ. I think we're speaking on levels now. Some persons would prefer to use monthly levels, right? Now, for example, if I was to use a monthly level, this level engine here will come in. I think UG as well will come in, right? So it depends, because if you use monthly levels, then your key levels still differ from mine because I don't use monthly levels. You understand? So again, that's why you see, it would always bring me back to the conversation about the system that we trade and how important it is that they work for the long term, because it plays a vital role in the success. Not just playing a vital role, it is the foundation of the success we have in trading, right? The systems we trade. And now, personally, I don't trade price. What I mean is, I don't trade price. I don't trade. I trade a strategy. I trade a system, right? So what I mean is, I don't pay so much attention to the individual currencies or assets. Not really. I trade a system. So it is a system I follow, come what may. So I think when we trade, we need to trade in such manners that we trade our strategies or the systems, not really just the currency pair or focusing on what the currency is about to do next. I think that's how we analyze. But in real sense, let's make sure that it is the systems that we have created that we know work for the long term that we're trading. If we trade in such manner, then with risk management, definitely will be profitable in the long term. Again, just brings me back to making sure, all right, just making sure that the systems we trade are profitable. And then, how would you know that if you don't already have a back testing session done to find out if your TA works? Then a journal is the next best thing. Okay, a journal would not, unless you lie on the journal, unless you lie to yourself. But if you take every trade and if you record every trade, a journal is supposed to help you see your flaws. And now this is one of the things that I heard in my early days when I was learning to trade. Um, you see, when it comes to being profitable, I think I've heard this before in my early days. I also heard this in recent times when I paid for education, because I have also paid for education as well in recent times when it comes to trading. Now, I heard that the first step to being profitable is to admit that you're not profitable. Because you see, as traders, we tend to, I think maybe it's an ego thing, or maybe we don't just like to say that we're not profitable, because every single person on the internet would claim to be profitable. Every single person says that he or she is profitable, right? So nobody wants to say that he or she is not profitable. It's like, I don't know, you feel that you've lost or something. I think it's just a thing with us traders. We don't want to admit that we're not profitable. But it's the first step to becoming profitable. You just have to let go of the pride and the ego and just admit. Because when you agree that you're not profitable, you then begin to work on being profitable. But the moment you tell yourself that you are profitable, or the moment you think that you are profitable. You will not want to work on being profitable because you think you are already, right? So the first step, the very first step to being profitable is to first admit and agree that you are not profitable. When you do that, you can now begin to work on profitability and then use all the necessary tools. Journaling being one of the most important. And that's why you saw that at some point in our sessions, I would always stress journaling. I would bring it up as a topic. I would make sure that we speak on it. I would make sure that we all have our journals. And it's important because in the next few months, you look at your journal and the journal will speak to you. The only time when your journal would not tell the truth is if you're lying on the journals, if you're not recording every single trade you're taking and every single trade your system is presenting to you. But if you are doing so, then your journal is like going to help you fizzle out and help you see where you might be lacking and where you need to work on. So it's still like a moment of truth. You still need to make sure that you're not adjusting things in your journal. Just so that when the next person sees it, you'll think that, okay, yeah, you're doing good. Because if that's the case, then you're going to struggle. And that's why I always say that you don't just want to have a journal. You need to have an account you've created, maybe a demo account that you're testing all the trades on. So you take the trade, you do the actual taking of the trades, and then when the trade plays out, you then record it in the journal, right? This way, when you're going through your journal, you know that yes, you took every single trade. You're accountable to every single trade you've taken. But if you're just dropping it on Trading View and when it plays out and it stops out, you just can't record it. You might be forced to let go of a trade. You might be forced to remove something. But when you take the actual trade, you become accountable, right? So if you're not already doing so, just make sure that you've created an account. I think I said this before, right? But make sure that you've created an account that you're using to take all the trades that your system presents. Don't leave anything out. Take everything. Remember, you're testing. Okay, you're still testing and making sure. So you cannot leave anything out. It's data. You need to start. You need all the data you can get. So when you do this and you record your trades, as time goes on, you then begin to see patterns, like I said. Patterns as to some of the losses you've taken and what could be causing these losses. I've also said before that not every loss means that you're wrong. But you can only find that out after you taking down your trades and journal them, right? So it just goes back. I know I've kind of digressed a bit, but I just need to point this out. I want to make sure that we are all recording our trades in our journals because, like I said before, the time is coming when we'll look through our journals, we'll have a review, and it will not be so fine that all through these months you're not recording your trades because your progress will then be very slow. We don't want that. Okay, so I hope that that point is clear.
Yeah, sure.
All right. So we move on, right? I think we were speaking on ended card, and yeah, that's about it. So USD card is now testing the support level. Interesting, pretty interesting, right? Hold on. So we pulled down here and we pushed up. It felt like we're never going to come back, but yeah, we are testing the level of support, and I like to see what happens. I like to see what happens with USD card. Euro AUD, nothing to see here. Euro NZD, yeah, I love to see this pullback, right? It comes down fine. Pound AUD, I love to see this pullback. Pound NZB, still in the trade, pushing to profit, but now we are giving back most of the gains. Yeah, we'll see what happens in the next few days. AUD USD, I'm out of this guy. EU, interesting. So we finally have come to test 1.12. Now we drop off this level in September, and we're back to testing the guy. So yeah, we'll see what happens as time goes on. The dollar is very weak. I can't even lie. It says pound USD as well. We pulled back, we didn't test, and now we're pushing up. Right, we'll see what happens. Time, right? We just need time. Time will tell what will happen with these guys. And then USD as well. We're bouncing on support so far. Yeah, that's about it. The Swiss franc pairs, of course, the Swiss franc is strong, so this guy's still dumping. ADC here. Nah, this guy fell off a cliff. It would have been so beautiful if we were able to get that entry. It would have been so good. Cat CHF, I'm very happy with this guy. Euro CHF, we're dumping hard. Pound CHF, we're dumping hard as well. NZD CHF, yeah, this would have been clean. I think 80 CHF and NZD CHF, these were two ideas that if only they just give us what we needed, it would have been fantastic. I think it would have been somewhere around maybe like 22% already this year. Would have been too good.
Anything fundamental, on these CHF years.
Now, here's the thing. Like this is what I was saying about these pairs being very interesting. Now, the Swiss franc is the economy is also not good, just like Japan. All right, the Swiss franc, the economy is also not good, but you see that it is so strong. It is because of safe havens, the safe haven demand on these currencies. So it has nothing to do with what is going on with the country or the economy at the moment, right? It's just at the moment it's safe haven demands, and that's it. That's what is ruling as we speak. So that's why I said when these things fizzle out, some of these guys might retrace because the Swiss National Bank, the Swiss franc currency might even look to go to negative rates. I think the last cut was, I think right now they have like 0.5% or 0.25%. I think they're like around the lowest with the yen. I think they're like very low. I can't remember what exactly it is. But that's what I'm trying to say. Like the currency is not so good, but you see how it's so strong, right? Because of safe haven demand. This is just to explain to you that sometimes when the currency is strong, it's not necessarily because the economy is too good. It may just be because of safe haven demand. You get. So that's really what is just driving this guy. And then you look at USCHF. This guy is taking the biggest hit. Why? Because the Swiss franc is strong, and then the dollar is what? Is weak. So that combination, and that's what we said about currency strength being relative, right? So the Swiss franc is strong. Okay. Look at the Swiss franc against the euro. The euro is down 1.6% against the Swiss franc. But then the dollar is down 3.71% against the Swiss franc. Why is that a difference? The difference is there because the dollar is weaker than the euro. You get? So the dollar is now taking the biggest hit of all. That's why amongst the Swiss franc pairs, you see that the dollar has the biggest downside move. Because the dollar is weak and the Swiss franc is strong. So that divergence is what is giving us this huge drop to the downside. So yeah. We're breaking this level now. This is insane, right? Nah, Trump is crazy. Guys, so crazy. Either ways, let's see. Now, the market has not gotten to these levels in such a long time. Since 2011, we had not broken some of these lows, quite frankly. But yeah, let's see. We'll see. So yeah, this is all I have for currencies. For indices, there's not much. They're still just pulling back and recovering. Gold is breaking new highs, which is interesting. Offset is right, so it's not surprising. We pulled back, but not enough to get a retest. I'm not called it a retest. I was also planning on buying this guy either way, so yeah, that's about it. Silver, copper, dumped hard. A little bit of recovery here, but not so much. Platinum, not so much is going on. Silver, not so much is going on. They're just there, basically, just consolidating. So, to be honest, this is the most I have. And then oil. Yeah, I want to speak about oil. Yeah. So, George, I think George is here. Yeah, George is here. So, George, just to refer back to oil, right? Do you remember that we spoke about oil in the past, and you were asking whether or not we should have bought oil, right? Because of the fact that it was maintaining the support level. But now you see that we dumped, like we just broke the support level like it wasn't there. And this is what I've always said about sticking to the system, right? So I would not have bought this guy, even though it was at the time presenting opportunities, because we broke and now we're testing this key level. And now we're even trying to break the key level as well. It's crazy times. Crazy times, I can't lie. Crazy times. So I don't know if you guys have any other questions for me. Anything for me, just go ahead. Why don't we ask the question? Or if you guys want to look at anything.
Talking about the USD please can you display the screen on USD
Okay.
Okay, I would actually love to know what your bias is at this point in time for you as a CHF. For the fact that yes, we all know that sentiment, the market is being driven by sentiment at the moment, and the CHF pair is actually acting as a safe haven. So I would love to know your bias for UC. If this break below the key level, if probably it closes this way, then for May, and May get to test that point 5.84, would you consider that as an opportunity to go short, or you are still holding your on the long position for
Now,
UC?
nope, I don't have any long positions for UC at the moment. We're breaking, which is interesting, right? And like I said before, um, the market has not seen these levels in such a long time. In close to, I don't know, over a decade. Yeah, we haven't come down to
Yeah,
this level.
yeah, yeah.
So we're breaking,
That's what
right? We're breaking, and now if we look at the macro or the fundamentals, the dollar is still strong. All right, at least it is still better than the economies themselves. But that's not what the market is looking at right now. Like we said, safe haven, right? And sentiment. So we're breaking. The question is, how do we close at the end of this month? Okay, how do we close at the end of this month?
okay.
Let's see. Market has dropped 600 pips this month already. That's crazy, right? Look at this. When was the last time we saw a candle this huge in a month in the last few months? Last few years, it was not easy to see. But if we break and close below this level, then I would like to see if we pull back with retest, or if the next candle will just pop back above the level. You see, so that's what I'm waiting for. So will the next candle pull back for a retest, or will it just pop back above the key level? Also, we still don't know how this candle is going to close, right? If it will close below or if it will retrace and close above. So it depends, right? It depends. But if we close below, it's now to see how the next candle will open up, right? Do we open up and pull back for a retest, or do we open up and break back above the key level? That's the question. So I think that's why I said I'm not trying to rush tea at the moment. I want to see how some of these monthly candles close, and then that will help us to see where the next few months will take us. Okay.
Yeah, yeah, of course, of course. It's actually true. It's like I think
Yeah.
for the couple
Okay.
of weeks now, I think like 2 weeks now, taking trades is I don't know. It's like really somehow to me for the fact that I'm seeing some of these pairs on fire, like some of these particular currencies on fire. Talking about the yen and the Swiss francs, guys. Like getting to place any trade on any of these pairs, like it's not something that I always have like 10% confident on doing, unless my trading idea is actually in line with the sentimental drive of the market. That's to say, for instance, maybe I'm seeing an opportunity to go short on any of the XXX CHF pair or the XSX JPY pair. Those are the scenario that I would consider taking up that trade. Because, for instance, pound JPY, I took longs on pound JPY, and I think the longs was actually yesterday, and the immediate is it the immediate dump or on the JPY, like the strength that it happened to gain, that made pound J to drop. It really affected me, and like I got stopped out by a little week. Yeah, I was actually wicked out, not even a candle body. It was actually a week, and I was just surprised that like couple of hours later, and I'm like above my entry point even. And now I saw you calling trade on pound JPY today, and I was like, no, 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 that I wouldn't even look at it or consider doing that at all, because of the way this particular currency pair is actually moving. Yes, of course, like me personally, at this point, I wouldn't want to bet against either the yen or the Swiss francs pair, like personally, or my on my own idea. If anyone should ask me, I wouldn't want to take any trade against them. But well, I'm surprised that you actually took the longs or on pound and on pound J, which you've actually given us the reason being that the price is still maintaining the key level. So it's not bad. That's to you. But I wouldn't just want to get involved in any of those trades, betting against
Now,
these two.
I understand where you're coming from, right? I get it. And you see, here's something, like I said before, here's something that I have personally understood or learned is that, you see, I'm buying Pound J despite the sentiments, right? Despite the Japanese yen being a safe haven. Now, this trick could stop me out. I mean, I don't really care, to be honest. Like, I don't really care. Now, it's only going to be one loss. At the end of the day, it's just going to be an extra loss for me. And when I say I don't really care, is that at the end of the day, I would just trade my system. Like, I'll just do that any day, anytime, right? Because in the long term, I'll be fine. So I I don't trade sentiments, right? For example, look at what the sentiment is doing right now. I don't trade sentiments. I don't trade the short-term fear of greed that traders have. I don't. I trade a system, and that's what I always do. And that's why it goes back to the fact that your system. Now, look at what has happened in the past few weeks. How many portfolios have survived this dramatic moves? How many portfolios have survived this chaos? How many? Right? I'm fine. I'm in profit. Right? I have let's see. I think I still have 5 trades open, and let me see. Hold up. I'm still up well over 4%. Now I think my portfolio has pulled back in terms of the running trades, but I'm still up well over 4%. I'm still cool, right? I'm up 13% for the year. I think I took a loss on pound GPY, so I'm up 13%. I'm still fine, right? So what I'm saying is, you see how in this time of uncertainty, you see how relaxed I am because of the system. Now, so many portfolios would have taken so many hits, so many profit accounts would have been blown, so many funded accounts would have been drawn down. You know, people are just getting hit left, right, and center, and that's why in times like this, I appreciate the system so much. What I've been able to come up with, because it is so good that in these times, I was even benefiting from the chaos, right? I had 3 trades hit take profit on the same day, 3, and that was insane. That was crazy, and that's what gave my portfolio the huge push I'm currently having. And I still have running trades that I think completely fine. I'll go to bed and I'll wake up without having to worry about what the market wants to do. I mean, it would be crazy. I'll see it, but like, I don't see that as something that affects my portfolio like so bad. And I think so many persons have asked me the question that, how would you have so many trades open? What if there's chaos? I mean, this is an example of chaos, right? Chaos, yet I'm fine. It just goes to show you that these trades are just taken at important levels, and that's about it. So, going back to the point as to not touching a particular pair or asset, I understand where that's coming from. But personally, I would touch all the pairs. Like, I really don't give a shit, to be honest. I would touch everything, right? I would touch it as long as the system presents the opportunity. I'll take it. I don't care what these guys have to do. So, because it just gives you unless you don't have so much confidence in your system, you take it, right? Take the trades. Just take them trades, and then for the most part, you guys are still testing. Most of us are still testing our systems to see the solidarity of the system and just standing the test of time and the test of chaos. So I think this is the time when you want to take in all your trades, because when you take your trades and you record them, you're like, okay, what if I have an account? What if I had an account that was big? What if I was managing, say, $300,000? How would I be performing in such times? So it's not the time to get out of the trades or to avoid certain trades. It's the time to take everything. Because if you were managing this amount of money, what would you do? Like, how would you tackle such situations? So this is like, it's definitely a time to test the system more, if anything, not to run away from positions. That's how I see it, at least. So I think that's about it, to be honest.
Okay,
That's about
no
it.
problem.
Yeah. So, any other questions, guys?
Hello, Casey.
Yeah, Abdul.
Yeah, okay. Concerning Carlos, I don't know if I can just share my own take on this USDCH.
All right, go ahead.
Yeah, actually, okay, you know, if I No, because according to what Carlos is saying that okay, maybe my May monthly candle it will retest back on this key level, and I'm like I think generally I think Carlos is planning on going short on this USDC, isn't it?
Yeah, I like to think so. That's what he said.
Yeah, no, not that I really have any idea on UC. Just that I wanted to see what you personally what you have in mind. But having a short position in mind for UC is not something that I would love to do like very fast, because I know that all these moves is because of one or two things, which sentiment one of them, then Swiss francs just playing as a safe haven at the moment. Even with the fact that you said that not that the economy is really good, but the reason for this I don't just know. So I wouldn't want to rush into any trade because of sentiment. No, no, no. I wouldn't want to do that. I'm just watching. Like for the most part, this particular point in time, I'm just looking at the chart. Honestly speaking, I'm just looking at the chart.
Yeah, okay. Because I had the same thought too. Because because of the volatility that has been happening this April. Because especially on this UC, when I was analyzing UC this afternoon, because according to what Casey just said now, that the price just broke through this level, maybe for the past a decade now, it hasn't broke through broken through this key level. So all my take on UC is that okay, before this month runs out, the price might probably go back. It might probably retrace back to the key level, because I'm still seeing long on them on this UC. Personally, I'm seeing long on this UC, because it hasn't broke through for the past a decade now, and I don't think anytime soon even if it breaks through, it will surely retrace back, because you know.
Now, okay, it might. Okay, so here's how I'll choose my words. It might retrace back, but of course, it's a crazy market, right? And anything can happen, quite frankly. Ordinarily, would like to believe that. Now, let me tell you guys something. Let me see. Gears one. Now, interestingly, the US dollar itself has not come down to its support level, not yet, right? Interestingly, that's why I feel like we still might have more downsides, because this is where we took off, right? This is where we took off in September, right? Around this support level, and we have not come down to even test the level yet, but UC has already broken. You get, and that's why I said the reason for the break is not just dollar weakness, is the Swiss franc strength. Ordinarily, we would have UC around key level, same place where we have DXY, right? But we don't. The Swiss franc is just so strong that UC has given up the level so far. So it can break back and close above the level, because look at what the yen did, right? So look at AJ, look at some of these pairs. They broke below the key level and then it pops back above it, right? That's to tell you that there's still some level of strength in these levels. So we don't know what's going to happen, right? And that's why we then allow the candlesticks to close maybe towards the end of the month, and that will now give us a better idea of what could be happening, right? It doesn't give us a guarantee, but it just gives us a better idea. So that's why I'm still waiting. I mean, let's not rule out the fact that the market can still trend to the downside. It can. It's still like breaking and giving us more signs of a downtrend, right? It tried to switch back up, but it failed woefully, and we just might head to the downside. Now, looking at the fundamentals, that's difficult because the dollar is still better than the Swiss franc, right? It is still better than the Swiss franc. So remember, I said that when you're selling any currency pair, you're betting on the weakness of the currency against the strength of another. So right now, it's playing out because the strength of the Swiss franc is much higher because of the safe haven demand. But I'd like to see what happens when that fizzles out. That's why I said I'm not really interested in trading sentiments right now, and I want to see how the market begins to react after the whole tariff things and the uncertainties have died down. That's the thing. So that's why I'm like just still sitting on the sidelines, to be honest.
So Cassie, based on the Trump pausing the tariff for 90 days, is it likely the sentiments will die down now, or it will still be on?
Now that's what we thought, right? When we saw that, you see, it was like a relief rally, right? That's what we thought. Because even the Swiss franc pairs yesterday, right? If you look at the daily candles, they kind of switched back into being blues. But today we're like, it's like he didn't even say anything. And I think some things happened today, which I haven't gotten the full gist on yet. But I think for the most part, what is driving the dollar weakness is the miss on CPI, right? That is also driving the sentiment because it's now the fear that the Fed might cut interest rates, right? That's also what's driving the weakness. CPI missed badly, right? It came in at 2.4% as opposed to 2.8%, right? And then even the forecast was expecting a little drop at 2.6. So it missed the previous data and also missed on forecast, right? So inflation is dropping in the US. That's what this data shows. So that is also it kind of weakens the dollar in a way. So that's part of why we're having the weakness of the dollar, if that makes sense. So it is that alongside the whole tariff thing. So it's crazy, right? It is very crazy. So that's why, to be honest.
All right, thank you very much.
So again, let's see, right? I think let's just sit on the sidelines. It's we're in chaotic times, so just sit on the sidelines pretty much, and only take our trades if they properly set up, right? Like if you're still testing your trades, you want to take your trade because think about this: in the next few years, right, in years to come, if you're back testing your system, you definitely need this price action, right? And if you're trying to create a system off of past data, you want to be taking the trades in this price action. So I'm not a fan of running away from trades, especially if you're testing, right? So I think you should still take the trade, right? Take them, create a demo account. At least you don't have to lose anything, right? So do that, record the trades, track them on your journal, see how far you're doing. Look at what your progress is like. Then you can see what your monthly returns look like. Then you can see what you average at the end of every month. Then you can see what your quarterly returns look like. These things are important to you as a trader. You want to know these things. So you can only know that or know these things if you track and journal your trades. So yeah. Any more questions?
Kasi,
Yeah, amen. Go ahead.
you mentioned something about the CPI news, right? And then
About
you
what?
said the CPI news value, the value that you said it missed.
Yeah, you did. You missed it.
But then isn't the CPI supposed to be like the inflation rates like in the states in the US?
Sorry, come again. I didn't get your question.
Isn't the CPI value supposed to be the inflation rate like in the US for that period?
Yeah, it's the same thing. Like CPI is inflation. Like inflation. That's
So,
the same thing.
so I'm saying that so if the CPI value reduces, is that good for the economy? So why is the dollar still down?
So yeah, like, sometimes it's not always. It depends, right? It depends. So if inflation, sometimes if inflation miss, and then if the labor market is too strong, right, it could cause havoc. Like this is now where we have to delve deep into the fundamentals, right? So it is not always the case that if inflation is dropping, it is good. Like ordinarily, it is good, but that data coming out, the market can react negatively to it. See, it's not really about what happens; it's how the market takes it. You get? It's not just what happens, it's how the market takes it. For example, I give you guys an example of the Fed, right? They cut interest rates in September. Right, let's go back. They cut interest rates in September down here. This is where they cut interest rates around these regions. Now the market rallied after that. Now, in most cases, when a central bank cuts interest rate, the currency tends to weaken. Look at what happened after they cut interest rate. It rallied off of that. So the question you don't ask is, okay, why is it rallying? Like, why is it not weakening off of that decision? It just tells you that it's not just a decision; it's how the market reacts to the decision. It's what they interpret by the decision that brings about what we're looking for. You get? So that's why. I think that makes sense. So context matters. That's why I said when you look at fundamentals, context matters. Context matters.
Okay, thank you.
Yeah. So all right. Yeah. Any more questions? Okay. Um. So in the absence of any other questions, we'll then close our session here today. It was a wonderful one, insightful as always, and thank you guys for showing up. Okay, it's a pleasure. And our next session would be, of course, on Monday next week. So you guys have a wonderful day, and I'll see you guys next week. Now, of course, it's impressive that we're keeping up with our risk management, which is good, all right? And it shows that we can survive, right? We can survive volatility, and that's the main thing for traders. And so far, we're doing it, all right? So far, we're holding our hands and understanding how to survive chaos and volatility, which is good. Some of us are quite new. Some of us did not witness the bear market in 2022. Some of us did not see COVID crash, and now you have to the market. Some of us did not see even the previous trade wars from Trump back in 2018 and the likes. So some of these chaotic news events are just coming to us firsthand. Some of us did not really see the unwind of the end trade. But these are historic times, and where some of us are new. So the point I'm making here is, even though we're new, we're understanding how to walk around it and how to survive it, which is good. So that when the next big thing comes, you know that, okay, fine, I survived the last one, so I definitely will survive the next one. So, but yeah, it's good. It's good. I'm happy to see this. And it gives me joy that we're making so much progress. That is what I want to see. And I'm so happy that we're doing that. Okay. So again, thank you guys for showing up today, for the questions and everything. So I'll see you guys on Monday. You guys have a wonderful day.
All right, okay, thank you very much.
Of course, I'll do anytime, man.
All right. Thank you, Casey.
Yeah, thanks,
Yeah,
Captain.
thank you.
Thanks, Captain. You are all welcome. Okay. Stop sharing. Stop recording. Okay.